Welcome to the deep dive. Today, we're jumping into a business story that, honestly, it doesn't just make headlines. It feels like it's fundamentally rewriting the roadmap for artificial intelligence itself. We're talking about the staggering $100 billion strategic partnership between Nvidia, the giant in AI hardware, and OpenAI, the company really defining this whole generative AI era.
Yeah, in this deep dive, it isn't just about following the money trail, like where does $100 billion actually go? Our mission, for you, the listener, is really to get under the hood of this deal.
Okay.
Understand its, well, pretty intricate structure, the powerful strategic needs, maybe even desperation, you could say, driving both NVIDIA and OpenAI, and crucially, the kind of seismic shockwaves this sends through the whole tech ecosystem, the competitive response it forces.
Right, and the scale itself is the first clue that something different is happening here. I mean, 10 gigawatts of AI compute infrastructure, that's the deployment target tied to this investment.
It's enormous.
To put that in perspective for everyone, that's roughly the power needed for, the entire Chicago metro area running continuously. That's the foundation they're building for what comes next with AGI.
Exactly, the infrastructure for the next leap.
Okay, let's unpack this. $100 billion is, it's just massive. But you said the mechanism, how it works, that's the real story. Analysts are calling it this circular investment or looped cash flow. But I guess my first question is this just clever financial engineering? Is it masking some huge underlying risk here?
That's a really sharp observation, actually,
Right.
because the financial architecture, it really is designed quite precisely to manage risk, especially for NVIDIA, while basically underwriting OpenAI's massive ambition.
How does the loop work then?
So it's like this. NVIDIA puts capital up to that $100 billion ceiling into OpenAI. In return, they get non-voting equity shares. That's important because it respects OpenAI's kind of unique governance setup.
Right, the nonprofit roots and the capped profit structure.
Exactly. And then OpenAI turns right around and uses that capital infusion to buy advanced hardware and systems. Specifically, you guessed it, NVIDIA's high-end data center stuff.
Wow. So NVIDIA is basically guaranteeing demand for its own future products, while at the same time capitalizing its most critical, most demanding customer. It's like a self-fulfilling prophecy for market dominance, isn't it?
Precisely. And, crucially, it's not a single check for $100 billion. That would be, well, incredibly risky for everyone.
Right.
They start with an initial tranche, $10 billion. And even that is contingent on getting a definitive purchase agreement completely finalized.
Okay, so there are gates.
Yes. And after that, the rest of the money, the big chunk,
Yeah.
is tied to actual physical deployment.
Milestones.
Every time OpenAI successfully stands up 1 gigawatt of new compute capacity, boom, the next tranche of NVIDIA's capital gets released.
All the way up to 10 GW and the full $100 billion.
Correct.
That milestone structure, it must impose incredible discipline on OpenAI.
It has to.
It also means this is a long game, right? We're not going to see this massive scale appear overnight.
Definitely not.
That first gigawatt, the one that unlocks the next phase of capital, isn't even slated to be operational until the second half of 2026.
And that extended lead time, it's necessary. Because the tech foundation for this huge build-out, it isn't even based on today's chips, like Blackwell.
Oh, interesting.
The agreement essentially locks OpenAI into using NVIDIA's next-generation platform, Vera Rubin. That's a designated successor to Blackwell.
Okay, Vera Rubin. So what's the key thing for listeners to know about that? Faster chips.
Well, yes, faster, obviously. But the critical detail about Vera Rubin, from what we understand, isn't just raw processing power. It's about huge steps forward in interconnect technology and memory bandwidth, things you absolutely need to link thousands, maybe tens of thousands of individual chips into one, truly massive, coherent supercomputer system.
Gotcha. So it's the plumbing just as much as the engines.
Exactly. And this deal guarantees OpenAI priority access to that bleeding-edge tech first in line.
That flows perfectly into the why behind all this. This isn't some friendly merger of equals. It feels more like a strategic necessity. It's driven by this AI arms race people talk about. The basic truth is if you don't have the compute power, the chips, you just can't innovate at the frontier anymore. You fall behind.
They're out of the game.
So let's look at OpenAI's side first, securing that compute frontier.
Right. I mean, Sam Altman, OpenAI's CEO, he's been very, very open about this. They are compute constrained. That's the term he uses.
Right.
They've got, 700 million weekly active users?
Yeah.
Their pace of innovation, developing the next GPT model, it's literally throttled by how many chips they can get their hands on.
So when a lab hits the wall on their current cluster.
Model improvement basically stops or slows dramatically.
Yeah.
This deal, it solves that problem, like instantly. It gives them guaranteed long-term priority supply of the best stuff NVIDIA will have, that Vera Rubin hardware.
And it must also change their dependency situation, right? They were, famously reliant on Microsoft Azure.
Deeply reliant. Yes, this deal seems to buy them, or at least move them towards, a greater degree of autonomy.
How so?
Well, it seems to create this new kind of strategic triumvirate of support. It moves them beyond just relying on one big partner.
Okay.
So Microsoft is still absolutely vital, right, for enterprise distribution, cloud services, getting models into businesses. Then you have Oracle, who's providing the massive physical data center infrastructure and power for that huge Stargate project.
Right, the $300 billion Oracle deal.
Exactly.
Yeah.
And now you add Nvidia, providing the core specialized AI hardware and the financial capital needed to actually buy that hardware. This three-way support, it makes OpenAI much more resilient, much less dependent on any single entity.
Okay, that makes sense for OpenAI. Now let's flip it. NVIDIA. Why do they do this? It feels like a masterstroke, maybe a defensive one.
Oh, absolutely. You hit it. It's a brilliant defensive strategy. Because NVIDIA's biggest long-term existential threat, probably not another chip company like AMD or Intel, not really.
It's that they're own customers.
Yeah. Exactly. It's the rise of custom in-house silicon, ASICs. Developed by their largest customers, Google with TPUs, Amazon with Trainium and Ferentia, Meta with MTIA. These companies want to design chips perfectly tuned for their workloads and, crucially, bypass NVIDIA's, let's say, very healthy margins.
Right. So how does this OpenAI deal help NVIDIA fight that?
Well, it effectively neutralizes that threat, at least from their most important research customer, OpenAI. Think about it. By offering up to $100 billion in capital and priority access to their future platforms, guaranteeing them the first and best Vera Rubin chips. NVIDIA basically makes the opportunity cost for OpenAI to go off and develop their own chip astronomically high. Why would you divert billions in years of effort into your own risky internal chip R&D when your main supplier is also your financial backer and giving you the best stuff first?
Yeah, that locks them in pretty tight.
It does. But there's another layer here. The real proprietary lock-in, maybe the part regulators will squint at the hardest. It isn't just the hardware or the money.
What is it?
It's the commitment buried in the deal specifics to co-optimize their roadmaps. OpenAI's models and software, NVIDIA's hardware and software, working together.
Co-optimize roadmaps. What does that mean in practice?
This is the really crucial clause, I think. It's not just NVIDIA selling chips to OpenAI. It's like merging parts of their engineering roadmaps. It creates this deep proprietary feedback loop.
So OpenAI can say, hey, for GPT-6, we really need...
Precisely. We need this specific type of calculation to be faster. Or we need more shared memory capacity between these groups of chips, or lower latency on this particular interconnect path. And NVIDIA engineers can then design features specifically for the Vera Rubin architecture to meet those exact demands from OpenAI's next models.
Wow. So they're literally building a hardware-software ecosystem that's tailor-made for each other right down at the silicon level.
Exactly. And think of the implication.
Competitors.
Yeah. OpenAI's competitors, maybe trying to run similar scale models on, say, AMD Instinct accelerators or future Intel chips, they will almost inherently face performance penalties because OpenAI's models will be custom-tuned, optimized for NVIDIA's specific hardware and software stack in a way theirs can't be.
That sounds like technical foreclosure. Is that the term?
That's exactly what regulators might call it, technical foreclosure in action. The barrier to entry isn't just the, massive price tag of the hardware anymore. It's the inability to match the sheer efficiency that comes from that bespoke, deeply integrated, co-optimized system.
Okay, here's where it gets really interesting. As you said earlier, this partnership, it feels like it just pours gasoline on market consolidation. It acts like this huge wave, just dramatically raising the infrastructure bar for everyone else. So how immediate, how costly are the reactions this forces across the competitive landscape?
Oh, they have to be immediate, and they are incredibly expensive.
Yeah.
For the rival AI labs, Google, Meta, Anthropic, they have to look at this deal as basically a declaration of war.
Right.
If OpenAI is now guaranteed $100 billion worth of custom-tuned cutting-edge compute, well, Google, Meta, Anthropic, They really have no choice now but to massively accelerate their own internal ASIC programs, their TPUs, their MTIA chips.
So this forces billions in like unplanned R&D spending, high risk spending.
Absolutely, just to try and stay in the same league. And it's not just about trying to match the raw performance either. It's about guaranteeing their own future supply chain independence.
They can't risk being dependent.
No way. Google has to double down on TPUs. Meta is forced to put, like, extreme urgency behind its MTIA architecture. Anthropic, they're likely deepening their reliance on AWS's custom chips, Trainium and Inferentia. They're all frantically trying to avoid having their core innovation bottlenecked by a vendor who is now essentially bankrolling their chief competitor.
Wow. Okay, what about NVIDIA's traditional chip rivals, AMD, Intel? Does this deal push them even further to the edges in this high-end AI space?
It certainly makes their life substantially harder, particularly in that very top-end training market, which is dominated by these big frontier model labs.
Right.
For AMD, with their Instinct accelerators, they'll likely be forced to redouble efforts selling to other hyperscalers, maybe those not developing foundational models, or compete much more aggressively on price to performance in market segments where they aren't going head-to-head for the AGI crown.
And Intel.
For Intel, with Gaudi and their GPU efforts.
Yeah.
Well, this deal kind of underscores that their most valuable role in this specific ultra-high-end ecosystem, at least right now, might be as a partner providing the specialized by 86 CPUs that work alongside NVIDIA's massive GPU clusters. It reinforces NVIDIA's dominance in the accelerator seat.
Okay, and this deal must also force a big rethink among the cloud partners, right? Microsoft was the essential partner for OpenAI. Now, that exclusive relationship looks a bit different.
It definitely looks diminished, or at least less exclusive. And think about the incentives for Microsoft now. They have massive new motivation to accelerate their own internal AI chip development, like their May Accelerator project.
To reduce their own dependency on NVIDIA.
Exactly. They must realize that relying so heavily on a single partner for the foundational technology of this new AI economy is a huge long-term liability, especially given NVIDIA's pricing power.
But the flip side is Oracle, right? They're the ones actually building the massive Stargate infrastructure for OpenAI.
Yes, and for Oracle, who's, on the hook to execute that reported $300 billion 5-year compute contract, this NVIDIA capital infusion is actually great news.
How so?
Because it basically ensures OpenAI actually has the funds required to pay Oracle Cloud Infrastructure, OCI, for that massive power-hungry build-out over the coming years. It de-risks the Stargate project for Oracle, in a way.
Okay, let's shift gears a bit and talk about the financial and regulatory gravity here. For NVIDIA investors, the potential upside seems transformative. You see analyst estimates suggesting the full 10 GW project could mean something like $350 billion in revenue for NVIDIA, spread over the multi-year duration. That's just unparalleled visibility.
It's absolutely massive potential revenue, but
yeah,
that leads us right into the risks, and they're significant.
Okay, like what?
First, concentration risk. It just intensifies dramatically. OpenAI is already a huge customer for NVIDIA, maybe 15–20% of revenue by some estimates already. This deal binds NVIDIA's financial future to OpenAI's success to an almost alarming degree.
So if OpenAI stumbles...
If OpenAI falters or their models don't deliver or they face execution issues, NVIDIA isn't just losing a customer. They're essentially funding their own potential bad debt and losing a massive guaranteed buyer for years of future product. It's a huge dependency.
And then there's the question about those incredible gross margins NVIDIA has enjoyed, right? Often in the mid-70% range, which is just spectacular for hardware. Yep. To lock down a deal of this sheer volume, you have to assume NVIDIA had to offer some pretty preferential pricing or, favorable terms.
That margin sustainability question is very real, and it's something investors are watching closely. If securing this high-volume, multi-year commitment required a substantial discount, which seems logical, then even if NVIDIA's overall revenue explodes upwards, the profitability per unit could contrast those amazing margins over time.
So investors might need to brace for.
They might need to prepare for potentially seeing slightly lower gross margins, maybe starting around 2026, when these Vera Rubin systems begin shipping in real volume.
Yeah.
It's a trade-off, massive scale for potentially slightly less margin percentage.
Okay. And finally, the elephant in the room, the regulatory gauntlet. This deal links the dominant chip supplier, NVIDIA, with the dominant AI model developer, OpenAI. Antitrust investigation by the DOJ, the FTC. It seems almost like a certainty, doesn't it?
Oh, absolutely. It's a near certainty, I would say. Regulators will be looking very, very closely at this. Their main concern is likely going to be around vertical foreclosure.
Vertical foreclosure.
Yeah, the idea that this combined powerhouse dominant supplier linked to dominant downstream user could use its combined market power to unfairly exclude or disadvantage competitors.
Oh.
The sheer scale of the capital, the guaranteed access to supply,
Yeah.
these are massive red flags for antitrust authorities.
But if we connect this back to that co-optimization clause we talked about,
Exactly.
that's where the legal challenge could get really interesting and maybe novel. It's not just about potential price discrimination anymore.
That's precisely the point. Regulators will likely scrutinize, I think, three main areas. One, preferential access. Does OpenAI get Vera Rubin chips months or quarters before anyone else? Two, price discrimination. Are rivals like Anthropic or maybe Cohere being charged significantly more for similar hardware? And three, maybe the most critical and hardest to prove, that technical foreclosure piece. They'll worry that the deep co-optimization effectively makes OpenAI's models run so much better on Nvidia hardware that it becomes practically impossible, or requires massive re-engineering and cost for rivals to achieve similar performance even if they could get the chips.
So it creates this technical moat.
A proprietary moat that isn't just anti-competitive, potentially, but you could argue it's anti-innovation because it locks the ecosystem around one integrated stack and makes it harder for alternative approaches to flourish.
So pulling it all together, what does this all mean? Where does this leave us?
Well, in short, I think this partnership is really a seminal moment. It's defined by this dual nature, right? On one hand, it's undeniably a powerful catalyst for technological acceleration. It's providing the raw fuel, the compute, needed to potentially drive towards real AGI breakthroughs faster than we thought.
But the other side.
But simultaneously, it's a formidable engine of market consolidation. It deeply entrenches the dominance of these two key players, Nvidia and OpenAI, and it dramatically increases the cost and complexity for anyone else trying to compete at that leading edge.
So if we try to connect this back to the bigger picture, maybe for you, the listener, trying to navigate this new landscape seems to demand a bit of a strategic shift in thinking, doesn't it?
I think so. A potentially smart approach, given the risks we've discussed, is to maybe focus on what some analysts call the second-order beneficiaries.
Okay, what does that mean?
Well, given the immense regulatory scrutiny and the concentration risk that Nvidia and OpenAI are taking on directly, maybe the more compelling investment strategy is the classic picks and shovels approach.
Right. Don't bet on the gold miner. Bet on the guy selling the shovels.
Exactly. Because that 10 GW build-out, it has to happen for this deal to work, regardless of exactly how the AI models evolve or who wins the eventual antitrust battles. So maybe you look for exposure in the companies that provide the absolute physical necessities. Data center design and construction firms, high-speed fiber networking companies who need to connect all this stuff, and maybe most critically, the power utilities and the specialized infrastructure developers. Someone has to actually generate and deliver that 10 gigawatts of reliable energy. That's where the guaranteed spending is going, potentially with lower direct risk than the two main partners.
That brings us right back to the sheer physicality of it all. It's easy to talk about $100 billion in AI models, but this investment is staged based on deploying gigawatts of actual physical stuff.
Concrete and steel and power lines.
Yeah, building 10 GW worth of data centers is an engineering and logistical challenge of the absolute highest order. It's vulnerable to every kind of real-world bottleneck, finding the land, navigating incredibly complex permitting processes, community approvals, and as you just mentioned, maybe the biggest one, securing immense, reliable sources of power. That's not trivial.
Not at all. Probably the biggest bottleneck.
So here's maybe a final provocative thought for you, the listener, to mull over. Of all the specific physical world dependencies, forget the chip tech itself for a moment, just the concrete execution. Which single factor do you think poses the greatest near-term risk to this whole $100 billion financial arrangement actually playing out as planned? Is it the sheer difficulty, the cost, the time involved in upgrading our often decades-old electrical grid to handle this kind of load? Or is it maybe the more mundane but potentially just as paralyzing bureaucratic complexity of local government permitting, environmental reviews, and just securing the right parcels of land near power substations and fiber routes? Something to definitely keep an eye on as this massive undertaking starts to unfold.